Snipers, you have to see what's happening to the Bitcoin price this Friday as we're heading into the weekend. And oftentimes I get the question whether or not we're heading into a bearish or bullish weekend based on how the revolving parts closed. And we have a lot to discuss today because Jerome Powell spoke for 8 minutes at market close, and look what happened. The US stock market wiped out $1.25 trillion today to close the week. That printed a very bearish weekly and daily candle. So heading into the weekend, we're certainly in the bearish side of the bias. The S&P 500 has just formed a textbook head and shoulder pattern, and we are now testing the 20-week moving average. And the DXY has had its highest weekly close in over 2 decades. There's a lot to talk about today, snipers. Let's dive straight into the Bitcoin chart. Smash the like button for the YouTube algorithm if you support these quick updates. So to close the week, the S&P 500 down 3.7%. Let's look at Bitcoin right now, testing 20,000 US dollars, breaking this major market structural support level at 21,000 US dollars, where we have the most volume inside this consolidation. The immediate short-term support level is the 2018 previous all-time high at 19,798. But don't count on that to hold for a fourth test. If we break below 19,798, it breaks this major support level and opens up the door to potentially test 17,204 to maybe form a lower low or test the previous lows that Bitcoin saw right around that $17,600 level. And if we look at this more cleaned up chart, you'll see this clearly here where we're breaking this channel that has consolidated over the last few weeks. You can see Bitcoin has been inside this channel. We're breaking this channel support. If we were to just look at the schematics of this, what we could maybe consider a bear flag, the target for this bear flag would be right around that $17,200 level, which is a major volume support level. So I just want to keep that on the table for the bearish case because the DXY did close for the week, its highest weekly close in over 2 decades, but is yet to break its yearly high. So coming into next week, what are we supposed to expect with this extremely bearish weekly candle for the S&P 500 to test the 20-week moving average? They couldn't have made this more complicated because that means coming into Monday, even with this daily candle, it looks like we're going to test below the 20-week moving average of the S&P 500. So what we need to monitor then is whether or not it's just a wick and we hold the 20-week moving average, or if we're really going to be seeing this reverse to the downside. And right now, 38.75 is a major level of support for the S&P 500 E-mini futures contract. But don't worry about that, snipers. I'll keep you guys up to date with those traditional markets and the revolving parts that affect the cryptocurrency markets. Let's talk about Ethereum. 1440 is the immediate short-term support level. That is the 2018 previous all-time high. Below that, it opens up the door to 1277 and 1165. Those are the 2 major volume support levels where Ethereum tried to break out of, but you can see we're now coming back to test those levels. And so we'll continue to monitor the Ethereum to Bitcoin chart. You can see 65,000 Satoshis is what I'm looking at as a potential downside target for the Ethereum to Bitcoin chart. It's seemingly in a transitionary phase right now because it's finding resistance at 80,000 Satoshis. The merge is on September 19th, and so we still have some time to potentially see this break out further, but it looks like we're going to be seeing a corrective rally. Typically, the Ethereum to Bitcoin chart will start to sell off ahead of other altcoins and be a leading indicator for altcoins. And so let's talk about some other revolving parts. Check out this gold to Bitcoin chart. You can see it came to test the 20-week moving average, and it held the 20-week moving average. I want to start monitoring this, snipers, because this could be an early confirmation of when the devastation is going to be over for Bitcoin. This is gold's value against Bitcoin. So far, gold has been in a bullish trend above its 20-week moving average. Let's continue to monitor that because Bitcoin is not giving us that type of confirmation. You can see it's much and below its 20-week moving average, clearly still inside of this bear market, clearly underperforming against the SPY. You can see Bitcoin against the SPY as well, which we'll continue to monitor. It's yet to break lows. This is something we could watch during the weekend. If we do see a dump on the weekend, the earliest confirmation that we're going to be seeing Bitcoin break its yearly lows is if the Bitcoin against SPY chart starts to break down from its yearly lows. So you can see we're right at that support level. Let's continue to monitor Bitcoin against the SPY. So Jerome Powell pretty much came out and he had a very hawkish hawkish stance on the market. And he said that they were potentially going to continue to raise interest rates. And he was saying that the economy does need to brace for this tightening from the feds, and that's going to be prolonged because that's the only way that they can combat inflation and create price stability, which is one of the major goals of the Federal Reserve. And so that obviously affected the markets. The equity markets closed in a bloodshed. And so coming into this weekend, we have a bearish bias. I want to make that very clear, snipers. 19,798 is the major support level. Below that is 17,200. If we're going to see 17,200, the first confirmation is going to be that Bitcoin against SPY chart breaking its yearly lows. And now it really puts a scenario for Bitcoin to also break its yearly lows on the table. That's going to be the earliest confirmation. I appreciate each and every one of you snipers tuning into the channel. Let's see what happens. It's still premature. This move just happened here at market close. The fact of the matter is the S&P 500 had a very bearish weekly and daily candle, which means that coming into Monday, we could also see some red. The real question is whether or not we're going to stay below 4,000 for the E-mini futures contract, because that's where the 20-week moving average is sitting. And if we break away from that 20-week moving average and we start to see full daily candles below 4,000, that's going to really put a more bearish scenario on the table. But for now, the S&P 500 has yet to break its yearly lows. The DXY is yet to break its yearly highs. And so I know we're starting to see bearish news come out. We're starting to see a reaction, but I think this was a long overdue reaction from the recent run-up that the markets have seen from their lows. And so nothing of a surprise here. I think that this still could potentially be a healthy correction. This weekend could be telling of that. So let's see what happens. With that, thank you all snipers for tuning into the channel. Smash the like button for the YouTube algorithm if you support these on-the-go updates, and I'll see you guys next time. Snipers.